Testing, testing. What is up? How you doing? Lex, how you going, man? Cheers. We are. Excellent connection. Let me just adjust this level of music. All right, that's a bit better. All right, it's been a couple of days. What is it? The 14th of February in Australia here. Happy Valentine's Day, Australia. The Super Bowl, oh, right on. Was it the Chiefs that won the Super Bowl? I have no idea. I'm not American, but that's cool. If you want some money from betting on a team, then hooray. Go football, yes, go sports. Happy Valentine's Day all, especially you. Good to be back in here. Your great education, thank you. You're welcome, Peter. Peter from, I think, Florida? Is that right? What's up, Jack? My Aussie, my fellow Aussie. We're getting the heat wave now in Brisbane, by the way. It's been disgusting here. I've been hanging out in the cold room at work. Nice, chilly, frosty. Hell yeah, Florida. So was it the Chiefs versus the Eagles? Was that what it was? 45 Celsius. Oh my gosh. Bloody hell. Right as Bitcoin is turning the temperature up as well, huh? We're back up to 21,000, knocking on the door of 800, 21,800-ish. Very cool. We tagged it. 21.8, guys. Nice inverse head and shoulders, if you can see that pattern. Not the prettiest, but it's there, right? Neckline, something like that. There is actually a head and shoulders thingamajiggy that I'll show you. Where is it? Maybe it's under... Shout out if you see it. Not that I can hear anyone. Is it in here? Nope. Guessing it's in patterns. Yeah, there it is, head and shoulders. So we got left shoulder, neck, head. I would say, okay, neck, right shoulder, and then here we are. We've broken the neckline. So a nice, what's a measured move from the head? You know those people that like to do measured moves? Like to calculate the height from the tip of the head to the neckline. If we measure that up, that brings us back up from a breakout of the neckline to $22,000. So we should see, according to the head and shoulders theory, the inverse head and shoulders, whichever one you want, you should hit the distance from the head to the neckline extrapolated to the point of breakout of the neckline as a measuring stick. Now let me, before I carry on any further, let me let me spread this across the social media. So I'll just grab the hyperlink for the stream first, won't be a second. We've got half an hour left of today's candle as well, as you all know. Hyperlink. And if you guys want to get informed, like you seem to be informed of when I go live because you're already on here. You must have your YouTube notifications turned on. So good on you. Let me go to my Discord here and just share this to everyone that I am live. Happy Valentine's Day. CPI soon. Forecast of 6.2% for CPI. Coming out in only a matter of hours, right? Let's see. We want to broadcast this to Twitter as well. Let's go to Twitter. Let's tweet. And I'll grab some little hashtags as well. So those hashtag searching might find my stream. I'd love to know the statistics on who actually finds my stream via Twitter hashtags. That'd be interesting. All right. Maybe like one person in the past 2 months. All right, here we go. So nice inverse head and shoulders. I think there's every reason to suggest that this was some kind of short-term pivot, if not, a pivot of this entire move down here. You can see that is our weekend box. We came out of the weekend. Comparatively speaking, relatively speaking, it was a very flat weekend compared to the previous 4. You can see that in comparison there. So there's the weekend that's just gone. And every other weekend has been around about $1,000 movement as a volatility range for Bitcoin. So this weekend, pretty flat. You can see that if we zoom right out on, say, like, let's go to the daily chart just to get some perspective here. And just to get our bearings, let me go full screen. Turn that off, hit save. All right. To the left, there's the Celsius drop in June. Interest rates, crazy. Inflation rate, crazy. We put in our June low, rallied up to 25K by August, dumped back down in September, rallied back up again, made a September high after the Queen passed away, and then retraced that whole move up and some. Didn't make a new low though. June low was still the line in the sand. Hit some kind of bottom, like a bit of a double bottom, you could say. So bounce off that. Things were looking optimistic. We pushed up and made a new high. Well, a new high for this region anyway. We call that our November high. And then everyone knows what happened after that. FTX collapsed. Sam Bankman-Fried on the run, all that good stuff. Bitcoin made a brand new low. And it is down here. This is our, basically, at least for now, that is the lowest point of the bear market. Now that low, it could be the low of the market. We may not get lower than that. Not saying that it is impossible to get lower, but when you're dealing with probability versus possibility, probability says, I think, that we're not going to go lower than that. Is it possible though? Yes, everything's possible, right? A lot of things are possible, not everything, but a lot of things. But I don't deal with possibilities. I prefer to deal with probabilities. I think we're probably going to hold some kind of level of support. And I think a lot of that is driven by the stock market sentiment, right? Just a quick glance over to the S&P 500, and I'll look at the NASDAQ as well, because look, the NASDAQ is way more heavily correlated to Bitcoin, or that's the kind of school of thought there. If we go out to the daily chart, you can see, yeah, we broke this downward resistance that we've been dealing with since late 2021, or yeah, so December 2021 was when we sort of capped out around the top, maybe early January of 2022. So the whole of last year was ugly. It was a bear market, lower highs on the macro scale, lower lows. But look, we seem to have turned a corner here. We've not only put in a inverse head and shoulders, there's the head, there's the left shoulder, head, right shoulder, some kind of inverse head and shoulders structure, right? So that is a pivot structure, and we are out on the daily chart. We can even probably identify it on the weekly. That ain't no joke. You don't just ignore that. That is, I think, recipe enough to see some kind of, push, and we're seeing that push. The last four weeks, arguably 10 weeks, has been some kind of like rally up, or let's say 8 weeks. Okay, this was the 8th week that we're in, since putting in this higher low. See, that was significant, putting in that macro higher low, because every other low since this low has been lower, 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 and lower, right? Higher. But remember, it's the highs that dictate a downtrend. So we had a high, lower high, lower high, lower high, downtrend intact. But hey, look, bang, we've had a change of character. We've set in a macro higher high for the first time since, late 2021. So that is your signal there, market structure wise. On the weekly chart, undeniably, there has been a change of character, right? So now we're just waiting to see if we can continue this trend here of also, now that we've identified an uptrend, right? Higher lows, higher highs. So we've broken the downward highs. So now we're getting higher highs. So it's upward, right? Pretty simple stuff. Now what defines an uptrend? It's the lows, remember? So downtrend, it's the highs. Uptrend, lows. So lows, higher. What we need to see, we don't care if this caps out here as a high. Who cares, right? It's the lows we're focusing on now. So we need to make sure that the next sort of macro pivot, like let's say it happens here just arguably for demonstration purposes. If we cap out here, we want to see this low hold somewhere above that low, and that will maintain the trend, the uptrend, right? So the S&P can come up here and get rejected and come all the way back down to here and still be in an uptrend, right? Because we've got higher lows, right? But, at least with this path here, like we might get something even better than that. We might get a pullback to, this high here and find support and then rally on. But we'll see. We'll see what happens. The S&P, as history has proven, does like to go up more than it goes down. That doesn't mean that there aren't bear markets, like downtrends, but they're not that long compared with the uptrend of the overall stock market, right? These crashes and bear markets are limited in time. They don't go forever. The overall trend is an upward direction, and I can hear all the people screaming out, up only, huh? So yes, up only, 100%, it's been up only, with pullbacks along the way, like a healthy trend does, right? So yeah, the S&P 500 has gone up only. The Dow Jones has gone up only. The NASDAQ has gone up only. What of it? It's not a joke. It's the trend. So anyway, are we going to carry on the trend, or do we think that we know better than the trend that's been going for decades? Do we think that this is the end of the markets as we know it? Do you think we're in for a decade-long bear market that's never happened in history? I doubt it. I highly doubt that. There's some, there's always going to be those people calling for recessions. That happens every point in the market. You've got these bearish people that are always saying, "Oh, we're too elevated. The economy's looking like crap. We have to correct here. There's going to be a bear market." Righto. Okay. Well, people have been calling for recessions for a long, long time. There's, obviously they got what they wanted here and here. Cool. But was it the end of the world? No. We recovered off the back of that. The COVID-19, yes, I'll say it. I don't care about YouTube trying to... By the way, YouTube does not care if you say COVID-19. YouTube only cares if you're putting out information against the government agenda for COVID. I mean, the whole COVID-19 situation anyway has, gone into a new chapter anyway. It's not as at the forefront of the media now. It's people are tired of hearing about it. It doesn't generate the same attention as it was. I highly doubt that anyone cares about COVID-19. I do apologize to those that may be suffering it right now. It's no joke, I'm sure. But look, it was a thing that happened. I'm not afraid to say that this was the COVID-19 drop. It's funny, you get a lot of channels saying, "Ooh, the C19 drop," or the flash crash of 2020. They try to dodge around the word. Anyway, COVID drop, massive spring up because of the quantitative easing, the QE that the Fed put out in basically answer to the fact that the global economy had grinded to a halt, basically. Supply chain issues everywhere. A lot of the workforce globally was home, isolating, to try and stay away from the pandemic, right? So yeah, that brings things to a screeching halt. To keep things afloat, the government, not just the US government, many governments around the world provided stimulus relief to the people, not because they care about people, but because they care about the economy, right? That's, if they cared about people, they'd be given a stimulus a lot more often than that. Anyway, yeah, they give a shit about the economy, so, they kept the world moving to some degree by printing a lot of money, so basically inflating the money supply with quantitative easing. And now, the result, we have to pay for that, right? That's going to cause a lot of shake-up in the market. So we spent all of last year feeling the repercussions of what we did to stay alive here with markets. So this is us paying for it. A lot of people are saying that we haven't yet paid for it. We've still got more work to do, and that we're going to experience this huge giant correction of the markets. But look, I'll believe it when I see it. There's no real evidence for that at this stage. Wow, we got a whopping 10 people in the stream. What's up, guys? You guys are the OGs. Hit the like button. Looks like you have already. Thank you for that. Subscribe if you haven't already, and hit the little bell notification. Anyway, that's enough about the S&P rant. Yeah, look, you have to see FUD for what it is, and it's always coming from the same people usually. You've got your big short dude, Michael Burry. He's always going to say that there's a crash around the corner. That's just who he is, They made a movie on him being short, so of course he's going to stay the course. He said, you know, so he put out a tweet. I think he said short or sell or something like that. Sell now. And then the market rocketed up and he deleted his Twitter. So there you go. Bit of a backfire there, Michael. Oh well, at least you were right once in a big way. That's cool. So are we going to get some massive correction? I highly doubt it, but you know, I don't want to be closed off to the possibility of some kind of like massive impending doom pullback. Because look, I'll be making money off that anyway, because you can go short, right? So yeah, until we get that signal, we're up. We are heading back up. It is an uptrend. Even right now in the smaller time frame, right? We've you know, found support somewhere and we are traveling upward. So I'm going to delete this squiggle here. And let's look at the glorious price action and candle structure that we have going on here. Now, to tie back to what I was getting at, we had that November high just before FTX collapsed, right? Very sharp pivot point. So that's a very deep line in the sand, that November line, right? And lo and behold, we met it as resistance over here back in, you know, mid to late January. But we broke it eventually. We got through that and met the September high, got above the September high, even attempted a push up toward the August high, didn't quite make it. We have retraced, and seemingly enough, we fell through that September high line of, you know, support resistance line. You can see we initially tried to hold it. If we zoom in on the 1 hour chart, there's the September high line. You can see right here, this whole structure, we tried to use that as support to rally back up, and it started to look okay, like we were initially, but yeah, more correction was on the cards, of course. And look, we've used that November high as like a bit of a double bottom support for now. This could break, guys. This could pull back and break. So we'll see. Serrano says, Uri was lucky? Well, he wasn't unlucky, was he? He was lucky, for sure. Like, obviously it was a calculated measure of what was happening with the housing market. So yes, it wasn't luck, it was skill. It was analysis, no doubt. I don't disagree. But look, how often, if you're gonna shout wolf every month of the year on end for decades on end, like, you're gonna get it wrong from time to time. Yeah, he's either early. Look, yeah, we'll see. A lot, like, there's a lot of these so-called experts that are coming out and saying that we're due for a recession. They've been saying that since 2008. And look, it comes and it goes, and I don't know. I don't think it's it's not enough to shake my view of what seems to be happening here. If we're propped up, like if the market is propped up by the Fed or by propaganda, like false data, then you know that's what it is. Like it's manipulated up, right? But look, if things are manipulated up, why would you be going short? You know what I mean? Like, why would you be expecting a crash if the power of the world, like, you know, if the economy, if the governments are propping everything up and pushing it up, like, why would you fight against that? You know what I mean? So, and obviously that's a conspiracy that's the case, and I don't think it is the case. I don't think the government's that sophisticated. They're actually very unorganized and very slow to react to a lot of things, and highly uncoordinated. So, Yeah, we all know governments. They like to contradict. It's a self-contradicting mechanism a lot of the times, like because it's hard to get the government to be in total confluence on some issues. That's not the case, but a lot of the times you can't get a resounding yes or no in certain things. So there's always going to be pressure against certain things. But yeah, I don't know. We just have to wait and see what happens. We're just like a guppy, trying to figure out which direction to take. We'll let the sharks and the whales and whatever, pick the direction, and we just have to go with it. So that direction, I mean, if you zoom out on Bitcoin, let's go like, say, the daily chart. I mean, it doesn't take, like a huge, like multi-year expert to see that something has shifted in the structure here. We've had, a very nasty bear market for Bitcoin, 77% down, lower highs, lower lows. And right now we're sort of, there are signs that we're breaking that that character of the market. So like, getting above this November high from back here was a significant thing, right? Yes, we didn't quite meet the August high of 25.2k, but we're still hanging up high. We're still fairly high from that move in January, right? So all of February so far has been corrective, which is only healthy, right? If we're going to get some kind of uptrend, you do need corrections along the way. It doesn't always just go up. There are times that it seems to, but yeah, look, a correction along the way is not. I don't think it's unhealthy. It's actually a good thing. Let's zoom in. What's happening right now? Let's go to. We're 8 minutes away from the daily close here. Let's jump down to the hour chart. We're still trying to round off the rest of this day positively. Let's hide the lines. We've got a bit of a doji here, cross doji. Can we turn it into a hammer in the final 7 minutes? Can we get like this to come up here and close as a green hammer at the bottom of some kind of pullback here? Maybe we can. We'll see. Yeah, that's it. Recession's not 100% on or off the table. It's just it's a thing to be aware of, like, and cautious of in case it does happen. And I'm not saying like throw caution to the wind and just ignore the possibility. But all I'm saying is, at this point in time, at this very moment, you should not be shaking in the corner and missing out on trades because you're scared of something that hasn't happened. When we see the signs, when we see the primary signs of markets feeling the effect of the beginnings of a recession, then we'll look at that and we'll talk about it, and I'll certainly be like screaming it from the top of the mountain, or shouting it rather. Other than that, like I've certainly heard many channels, many videos out there calling for and warning people of doom and recession. It was the same back here when we were in the depths of here. A lot of people were warning everybody that this wasn't over yet and that the bear market is likely to continue. And yeah, I guess the people that bought into that scenario missed all of this or got stopped out of their shorts or got liquidated, that kind of thing. So look, play the market day to day. Like just, use what we've got on the chart. That's the best thing. Forecasts 3 months, 6 months out from now don't help us at all. We need to, I think, unless you're an investor, with, like a 5-year outlook or a 3-year, 2-year outlook, forecasts that haven't come to fruition yet or haven't even started aren't really going to help you in the short term. Like if you're trading, especially if you're a scalper, it's obviously scalper day trading is the thing, and it doesn't matter if you're going up or down, right? You're playing the microstructure. You're just playing the noise, which goes up and down on a day-to-day basis. There's no rhyme or reason to really have a bias of either direction. It's healthy to know it, but I guess that's another cool thing about scalping is that you can get bullish and bearish activity all in the one day. Trends happen all the time, and they turn all the time on those intraday micro charts. So just catch up with some more comments here. CPI when 2%. Yeah, that's right. Olog high. What's happening, Olog? Yeah, 2% would be nice. I think a 6.2 is what they're calling for. Let me just turn this on to dark mode. So let's just turn on this month. Now, what time is it here? It's 10 a.m. So 11:30 p.m. That's 13 and a half hours from now. We have CPI. In 13 and a half hours from now, we'll know if we get the forecasted 6.2% or better. If we get a 6, that would be cool. That would be very bullish. If we get a 6.3 or a 6.4, expect some, turbulence and some pullback. But look, if we get anywhere close to 6.2 or better, then I think that's going to be a good thing. That can only be a good thing, right? It's an improvement off 6.5, which is what last year's the January CPI report suggested. So, and a hell of an improvement off 9.1%, which is what we got in July. 9.1, 8.5, 8.3, 8.2, 7.7, 7.1. So the whole run since the peak has been an improvement. Disinflation, right? Inflation's calming down. Now, to whether these numbers are red or green, that's just a reflection of whether it hit the forecast or not. Whether it was above or below the forecast. You can see the last one was bang on. It pulled in exactly as forecast, which is why it was a white figure here. If it's lower than forecast, it'll be red, and if it's higher than forecast, it'll be green. So there you go, that's it. Now, I think I was calling for a 5.8. I'm probably way off. Maybe it's gonna be, I don't know. What do you reckon? Do you reckon it's gonna be 6.2? Do you reckon it's gonna be worse? Let's do a little poll. Let's see what people think. All 14 people here. What CPI? And I have to specify year over year because it's the year over year we're talking about. What year over year CPI figure will we get? Let's make it nice and easy. I'll say more than 6.2%. I'll say less than, or actually 6.2%, which is the forecast. And then I'll add an option less than 6.2%. Let's see what people are thinking here. I might actually do a YouTube poll as well. with all the hashtags and all that pretty stuff. So cast your votes, guys. Poll is up. We'll see what 14 people think if everyone votes. 2020 COVID crash was a perfect example. They gave themselves the time to dump all their shit, then banned or closed everything. People get hyper bullish and hyper bearish, same. Yeah. Forever hyper. Dozen roses in a bouquet for $20.24 US in South Texas. Wow. Is that bad or good? In Australia, that sounds reasonable. A dozen roses. In Australia, you would probably pay about $80 for a dozen roses. That says I'm entirely too uneducated to vote on this. That's alright, man. All good. It looks like we've got a 33% split. Three-way split there. 6 people, 2 people each have voted for each category. Isn't that kind of reflective? TradingView has a US CPI chart, but I don't quite understand it. I think it's tracking the overall value of the dollar over time and not the rate of change. I'll show you the CPI chart that I look at. So CPI just meaning inflation, right? So inflation rate. This is your CPI chart here. You can see in June, so it reported in July, but the June reading was 9.1% by the BLS, the Bureau of Labor Statistics, the official inflation reporting department or institution or whatever you want to call it, group. So from here, you can see the reduction or the disinflation started to slow down a bit initially. See that? But then it sped back up, and we really started taking off. Now, the report for January's performance, which we get in 13.5 hours time, calls for 6.2%, which lies right here where my cursor is, in my crosshairs. So that would mean the blue line has slowed down a little. If we're to stay on the path, the trajectory of what it's been on, then a 5.8% is what we would get, which is my projection for the coming CPI figure, which would be a 5.8, which would be better than a 6.2, right? Better than forecast. Maybe it'll happen somewhere between that. Maybe we just get a big fat 6, you know, just a round number, 6. Which would be very bullish. 6.2 is going to cause, I think, positive market movement, you know, because the last time we got what was forecast, we went up, you know, and that was the last CPI reading, right? 6.5 was the forecast, 6.5 is what we got, the market rallied. So if we get what is forecast, I think the market will like that. And rally off that. Just like with the funds rate, you know, if we get what's forecast to us, we like it because we price it in and we expect it. The market doesn't like being shocked in a bad way. It loves being shocked in a good way though. If we were to pull in a 5.8, that would be a very positive shock to the market, I think. That would give the SPY a reason to come up and test this 420, 430 high that we had a few months back. But if you want to know what 2 days reading of inflation is according to the Trueflation website, let's open that up and have a quick look. They're calling for a 5.26. Sorry for the blinding light of this website, but that's just the best way to see it. Now, this is 1 year's worth of inflation data, according to this website, right? You can see their peak was actually 12.3%, 12.31%, whereas the government put out a 9.1, as we know, which is all the way back down here. So there's a huge discrepancy there, but as things settled into 2022, like if we go, like, let's just look at 6 months worth. they were pretty much on par with what the BLS was reporting for inflation. So right now, if we go to just this week, look at Trueflation, still reporting that inflation's coming down, which is excellent news, right? That's what we want to see. We want to see, this is a month's worth of data by Trueflation. You know, there was hiccups along the way where it goes up a bit, but for the most part, you can see the overall trend is down. 6 months worth of data, year to date, so since January. You can see since January we've made a lot of decent progress, almost down 1%, right? Pretty much down 1%. We're 5.25% now. Started at 6.25 or 6.27% in January, on the 1st of Jan. So very good stuff. Hopefully they're somewhat accurate as to what's happening. Anyway, enough about inflation. Let's see what's happening right now with Bitcoin. We've got the daily candle close. It closed as a doji, cross doji. What are we, 5 minutes into today's candle? It is CPI day, so this is the CPI candle, you could say. So far, a bit of a pullback. So just, yeah, keep your eye on today's performance as we move in toward CPI. Let me get my events line up, and I'll go back to full screen and zoom out a little. You can see CPI is just over here, and we are, let's measure it out in time, so 12 hours 55 minutes away or less. So I was a little bit off, I think, maybe. Wait, no, I'm not. Let me unlock this because this is not on the right spot. It's the 11:30 my time, so here. All right, now we got it. 13 hours 25 minutes until we get that result. So for today, are we going to like correct all day in preparation for CPI? Like what? Or is there going to be some kind of positive move and build up and anticipation going into CPI, like has been the case over the past, you know, few CPI releases? That's what we're going to be talking about. So I'm going to stream the CPI result, by the way. I'll be here. I'll be turning the stream on about half an hour before the result comes out. So keep an eye out for me going live again in 12 hours time, or whatever time half an hour is before CPI. Best way to check out, you know, when it is for your time zone, just go onto the Forex Factory website, the calendar view. Let me put a link to that in the chat. And you click on the time options up here and just select your time zone. So if you're in New York, you'd be choosing GMT -5 Eastern time. And then you'll get calendar, and notice that CPI comes out an hour before the market opens, so 8:30 a.m. I don't know if you guys are in, you guys are still yesterday for me, so you guys are still Monday evening, isn't it, in the US? So tomorrow morning, guys, 8:30 a.m. Eastern, CPI. I'll be on from 8 a.m. Eastern. But yeah, go to this website, choose your time zone. You can, if your computer does what mine's doing, you can synchronize the time to your device. So my computer obviously is set up to Brisbane time zone. Just click on match automatically and hit save, and then go back to the calendar. Click on this month, so you get the entire month's worth of, you know, events on your calendar. I've filtered out these two folders here, and I'm only looking at US data. So that's the way I have my filters set up. Some people have everything checked. I don't. I just like to only focus on the medium and high impact events for US, because Australia events don't seem to pull too much of an effect on crypto or markets, to be honest. But US seems to be the most important, which is it's kind of like what Hollywood suggests, is that the US is at the center of the universe. But anyway, yeah, just a bit of tongue-in-cheek. All right, so I'll close off that calendar. We know what we're expecting, or we know what the forecast is for, and we're going to find out what we get. And I'm looking forward to turning the stream on and catching you guys there if you'll join me. So get a good night's sleep, you Americans, and I'll have a good day. And everyone else in the daylight right now, have a good day, and I'll see you soon. Take care. Bye.